Dubai looks unstoppable. New skyscrapers, new records, new millionaires arriving every single day. But here's a question almost nobody asks. What happens to Dubai if the money ever stops flowing? What happens if the investors leave, the tourists stop coming, and the businesses pack up and go somewhere else? Today, we're exploring the one question Dubai's success story conveniently skips. And by the end of this video, you'll understand exactly how fragile or how strong Dubai's empire really is. Let's start with an uncomfortable truth. Dubai's entire model is built on movement. Money moving in, people moving in, businesses moving in. It's not a city that produces oil, minerals, or massive amounts of manufactured goods. It's a city that attracts capital. And anything built on attraction can, in theory, lose that attraction. So the real question becomes, what could actually slow Dubai down? The first risk is global economic shock. Dubai's economy is deeply connected to global trade, tourism, and finance. When the world economy slows down, fewer people travel, fewer companies expand, and fewer investors take risks. This isn't theoretical. It already happened once. During the 2008 financial crisis, Dubai's real estate market collapsed almost overnight. Property prices dropped by over 50% in some areas. Construction projects froze. Cranes stood still across the skyline. For a moment, the city that seemed unstoppable looked incredibly vulnerable. But here's what's interesting. Dubai didn't just survive that crisis. It used it. The government restructured debt, introduced new regulations, and rebuilt investor confidence. Within a few years, Dubai wasn't just back to where it was. It was stronger, more diversified, and more cautious about over-leveraging. So the first lesson is simple. Dubai has already been tested, and it adapted. The second major risk is regional instability. Dubai sits in a part of the world that, fairly or unfairly, gets associated with political risk. Conflicts in nearby countries can shake investor confidence, even when Dubai itself remains stable and safe. Perception matters as much as reality in global finance. If wealthy individuals start to feel uneasy about the region, some may choose to diversify into other financial centers instead. This is a risk Dubai cannot fully control. But here's how Dubai has responded. Strict neutrality in regional conflicts, heavy investment in security and surveillance infrastructure, and consistently ranking as one of the safest cities on earth, year after year. Dubai understood early on that perceived safety is a competitive advantage, and it has protected that advantage aggressively. The third risk, and maybe the most important one, is competition. Dubai is no longer the only city offering low taxes and business-friendly policies. Singapore offers similar advantages with a different regional focus. Saudi Arabia is now investing hundreds of billions of dollars into NEOM and other mega projects, directly competing for the same investors and businesses. Other Gulf cities like Abu Dhabi and Doha are also building their own free zones and incentives. The competition for global capital is intensifying. Dubai is no longer guaranteed to be the default choice. It has to keep earning that position. So how does Dubai stay ahead? By constantly reinventing itself. New visa categories for remote workers, freelancers, and retirees. New free zones targeting emerging industries like artificial intelligence, crypto, and green energy. Massive investments in sustainability and renewable energy, preparing for a future where oil-based wealth in the region eventually fades. Dubai isn't just defending its position, it's trying to stay several steps ahead of the cities trying to copy its model. Now let's talk about the oil question, because this matters more than people realize. Even though oil makes up a tiny fraction of Dubai's own economy, the wider region's wealth is still heavily tied to oil revenue. If global oil prices crash for an extended period, government spending across the region could slow down. That could mean fewer mega projects, fewer subsidies, and slower overall growth, even in a diversified economy like Dubai's. It's an indirect risk, but a real one. Dubai's leaders clearly understand this, which is part of why they've pushed so hard toward tourism, finance, and technology instead of staying dependent on regional oil wealth. So after all of this, what's the real answer? Could Dubai's money ever truly stop? Realistically, a complete collapse is extremely unlikely. Dubai has diversified far beyond a single industry. It has multiple income streams: trade, tourism, finance, real estate, and increasingly, technology. But slower growth, periods of correction, and increased competition, those are not just possible, they're inevitable. No city grows in a straight line forever. The 2008 crisis proved that Dubai can stumble. It also proved that Dubai can recover, and recover stronger than before. The real story isn't whether Dubai is invincible. It's whether Dubai keeps adapting fast enough to stay ahead of the risks it cannot fully control. So far, history says yes. But the next test is always just around the corner, and how Dubai responds to it will determine whether this story keeps being one of unstoppable growth or whether it eventually becomes a cautionary tale. If this video gave you a more complete picture of Dubai, subscribe to Dubai Decoded for more honest deep dives into the business, money, and risks behind the world's most ambitious city. Thanks for watching.